Good morning, everybody, and welcome to this weekly analysis session for Monday, the 14th of September 2015. The year is certainly flying by. Some news coming out this week, later on in the week, with Margaret Yellen and the Fed Open Committee meeting notes, etc., discussing on what their plans are to do with interest rates. So certainly that's going to be something that will have an impact on the markets one way or another. Unlikely that the Fed will raise interest rates this month, but certainly all attention will be on the style of language that they use and whether or not they foresee interest rates going up sooner rather than later. At this stage, looking like interest rates may well go up sort of December, maybe even a little bit potentially early into next year, January, but the market certainly keeping one eye on the Fed. Their economy is certainly picking up over there, so it's something that they can't keep interest rates at all-time lows forever and ever and ever, as the economic indicators are suggesting that their economy is starting to improve. Anyway, I digress. Let's get underway. And the content of this presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So again, before making an investing decision based on any of the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances. All right, let's get underway. Again, we'll go through and have a look at what's happened with the portfolio, what's happened with our market risk indicators. I ran a workshop over the course of the weekend, and it was certainly something that clients who attended that had never seen before, completely unaware of market risk indications. Being able to tell whether a market is in high risk, low risk, moderate risk, etc., was completely fine. And I think it just goes to show that if you've got some metrics that help you determine what the market risk is, then you can make better decisions on whether you want to be involved and the extent to which you want to be involved as well. So a very important concept, and one that we always cover off first and foremost as part of our weekly analysis sessions. Specific setups we'll go through and have a look. I couldn't find any new setups in the Australian market. I did find a few in the US, and there was a couple that triggered from last week as well. So speaking of market risk, at this point in time, the ASX 200, we are an extreme market risk. And as such, it means that we are to apply a 10% market risk multiplier to our maximum allowable drawdown. Our maximum allowable drawdown, remember, is defined as that amount of capital that we are allowed to have exposed to the market under a low market risk condition. Now, for most of it, it's somewhere between 10 and 15%, depending on your risk profile. Some of you may even be up to 20 if you're perhaps a little bit more adventurous in terms of your risk management. So that means you are now only allowed to have 10% of that amount exposed as risk in the market. Now, remember, when we're talking about exposed as risk, we're talking about value at risk. So the risk on any trades where you are yet to trail those stops to break even or better. In the US, we are at very high risk, and as such, we don't use a market risk multiplier of 80% there. That figure there is completely wrong, so please ignore that. I did change that before, but obviously it hasn't saved. So we'll need to go through and amend that. So that should be 20%. So 20% of your maximum allowable value at risk is what you should have exposed to the US market as we speak. So I'll just move the cursor over there and just try and rub that out. That shouldn't be 80, that should be 20. All right, so on the back of that, here we go, just to illustrate the point. In Australia, we are at extreme market risk, so therefore market risk multiplier of 10%. So assuming you are splitting your capital between the Australian markets and the US markets, that means that using a 15% allowable maximum drawdown, 7.5% of that you are allocating to Australia. So under a extreme market risk condition, 10% of that 7.5% means that you have a VARP, a value at risk limit, on the Australian portion of 0.75%. Over in the US, we are very high, so our market risk multiplier is 20%. So of our 7.5%, we apply a market risk multiplier of 20%, and that means that we're allowed to have 1.5% of our capital exposed as value at risk in the market. Again, everybody should be comfortable with that, but if you're not, please don't hesitate to request a coaching call and we will explain it in more detail for you. All right, so on the back of that, those of you who are choosing to scale out, I've talked about this quite a lot of recent times, certainly under higher market risk conditions. We really just want to keep managing our trades as we always have. We don't want to ram, cram and jam. We don't want to tighten stops. We're just asking to be stopped out under those particular circumstances. It's quite clear in having a look through the portfolio. Certainly some trades have been stopped out over the last 6 to 8 weeks, but there's still quite a significant portion of trades that are well above their trailing stops. So we've used a get out rule. Once price closes below the trailing stop, that's it. We're getting out at market in the next period, and that has worked very well amongst the broad volatility. Certainly not without losses, across the board. We have had losses, but certainly there's been a number of stocks that have held up really very, very well. And if the market does happen to get a kick along, then you're going to reap the benefits of that. Nevertheless, those of you who are choosing to scale out, still under this particular environment, you'd be looking for one-to-one targets. Certainly, that's not going to help you achieve those longer-term profits that are going to make the difference to your portfolio, is my belief. And very high risk in the US, and again, looking for one-to-one type profits as well. Right, let's go across and have a look now at Beyond Charts. And first of all, our market risk indicators. The XJO, as you can see, for quite a period of time, has really been moving down, starting to find a little bit of support down here at around the 4900 level. If we just sort of zoom out a little bit, we've really got to start to see our market start to move back up again. I think we're really wanting to see some closes up towards the 5400 level would be a promising sign for our market. At this stage, we've just got these lower peaks for the time being. We've got rising troughs at the bottom here. We're in a bit of a stagnation mode by definition there. We really need to see some nice white candles coming up through here. We might get that later on in the week if the US is not too upset by what Janet Yellen says later on. But at this point in time, it's really just a matter of waiting to see what happens. I'm not forecasting anything. And just continue managing your trades in the appropriate way. We don't want to overthink this. We want to keep our trading as simple as possible. If it's simple, easy to do, you're much more inclined to follow your trading rules, not try and second guess things, and that's the way you succeed in the markets. The S&P 1500, you'll see at the moment from the beginning of the year that the US market is down around about 5% as we speak. Last week on the market, the S&P 1500, if we had the last 2 weeks candles, at least we've got a white candle over those last 2 weeks. The last week certainly not looking too bad, but again, we've still got these lower peaks through here and higher troughs. So we're in stagnation mode at the moment. We really need to get some clear direction. One thing that you'll typically see drawn on charts is a tightening type of pattern here, where price is just sort of rebounding. It's being squeezed at this particular point in time, and price at some stage is going to need to move outside the boundaries of this tightening zone. Now, which direction that is going to be is anyone's guess at this particular stage in time. We've just got to abide by our market risk indicators and just wait and see what happens. Let's just go through now at the moment. I just want to have a look at a couple of other markets in the US. That's the ETF that's following the Nasdaq. You'll see that was one of the ETFs that was in the ETF Maximizer strategy. Big move down intraday in particular. When we had that big move down on the Dow, it's starting to make its way back up following the Nasdaq tech-based index. That's the XHB, that's the home builders. This is one that's also in the ETF strategy for this month. Certainly got belted like everything else did, but price action starting to move back up nicely, and last week had a nice big candle on that ETF as well, so that's moving in the right direction. That's the Dow. very similar to the S&P 1500 there. That's the Nasdaq. Again, some nice white candles coming in there the last 2 weeks, and we're back to the S&P 1500 again. All right, so in terms of Australian stocks, I couldn't find any new setups for Australia this particular week on a weekly basis. So what we'll do is we'll go through and have a look at some of the results of the scan over the course of the weekend that came up. Darren's put one in, FPH, Fisher & Paykel. So let's go and have a quick look at that one. FPH. This has actually been a pretty good stock, Fisher & Paykel, over a period of time. And you'll see that there was plenty of opportunity to get into a stock like this a long time ago. And there's our little green line, which is just our trailing stop. And if we just zoom in a little bit on that and have a bit of a look and just see whether or not recently, just for interest's sake, whether our little green line at $5.90, the close there was $5.91, so we would still be in that particular trade. And certainly the relative strength on this for a long period of time. There's been a number of opportunities where our price action model troughs higher than second from last peaks, etc., through these particular levels, and certainly further along the way that opportunities for us to get into a stock like this. In terms of Fisher & Paykel, look, certainly looking very strong at this particular point in time. The only reason this one doesn't fit into the list is that it doesn't quite meet our price action filter. That's the only point, where our last trough needs to be at or above the second from last peak. So there's the last peak, there's the second from last peak, and we can simply just put on a horizontal line there just for illustrative purposes, and you'll see that last trough is not quite meeting the box, or ticking the box rather, meeting our criteria for the price action. Other than that, looking very good. It's got three relative strength is certainly increasing in all three time frames, which is a very good sign. Certainly at this point of time, it's only got to get through these the ceiling overhead, and if it does, look, it could well move up, but at this point in time, being very finicky about our price action model, it doesn't quite meet at this time. Having said that, what I will be looking for over the next few weeks is, if this breaks out to the upside, coming back, having a nice retest and forming a trough that's above this old peak. But other than that, it looks pretty good. All right, so let's go across to our US market and have a look at our pendings for this particular week in no particular order. All right, now I'll just go up to the, I think we're not too sure whether at the top of the list there, M or not. We'll start with M anyway and work our way through. So there we go, we're not at our top of our list, so what I might do, let's go this way. So I'll open up my list, so when we go through it, that it gives me the one right at the top of the list rather than being halfway through. So in your own time, beyond charts. And there we go. And again, there we go. Fantastic. Good to see that Beyond Charts is on the ball this morning. Right, so the first stock that we've got, AIZ, Assurance Inc. At this particular point in time, this is a fairly wide stop on this one. I've put it in. If we think about percentage terms, we've got a protective stop, which is around about $11 away on an $80 stock. So if we think about that in percentage terms, I'll just bring up the calculator here. When my computer stops giving me the, there we go. There it is. My calculator over here. I've got two screens, and I've had the wheel or the circle of death there for a little period of time. So getting back, we've got around about $11, just roughly $11 risk on around about an $80 stock. And that's about 13, getting close to 14%. So it's getting out there a little bit. Certainly like to try and keep those protective stops around about the 10% level, plus or minus a couple of percent. So it's sort of getting at the upper end, if you like. But nevertheless, let's go through and have a look at a bit of the structure of the trade. Short-term uptrend, so therefore confirming now that we've got a new medium trough formed. That trough, where is that trough in relation to the second from last peak? Well, there's the last peak. There's the second from last peak. It's well above there. The other aspect of this, all these old points of supply, and this is something that we covered on the workshop on the weekend, old points of supply, once they're broken, are now starting to act as future points of demand, which is a positive sign. The relative strength in all three timeframes is certainly above zero and increasing over the last period as well. So that's, in terms of relative strength, outperforming the benchmark in all three timeframes. We really just need to, in this case, just zoom out and see where we are. And we're at all-time highs. So again, another positive for this particular setup. So we've just got to wait for a break of that last medium-term peak. So as such, our on-stop order comes in at $80.10. That shouldn't be $80.20. It should be $80.10 there. The reason being that I've moved that little arrow at the side there, and that's mucked up a little bit. So $80.10 with a limit to $80.90 and a protective stop coming in at $70 even. That's 0.5% and outside of 2 ATRs from our entry level. That's AIZ. Next one on the list in the US. I know Beyond Charts must have had a long weekend, struggling to turn the page. I'm sure it'll happen at any point now. Well, how about those Hawks on the weekend? Defeated this time by West Coast. So it's looking more and more like we're going to have two Perth teams in the grand final. ATR is the next one in the US. So again, just having a look at the price action on here. Short-term uptrend now confirmed. Therefore forming a trough. Where is this trough in relation to the second from last peak? There's the last peak. There's the second from last peak. That trough is above that second from last peak. So we go through and put on the value line and just make sure that it is. So the low, a little bit hard to see because I've got the annotation there. Let's just move him out of the way there for the moment. 64.66 is the low there. The high there is 63.63. So our low is above that second from last medium term peak. So it's meeting the price action criteria. We need to just make sure, where are we in the scheme of things? Well, again, we're at all-time highs. So thinking about that again, particularly in contrast to the overall market. So in terms of relative strength, for a while there, this stock had been underperforming through a period of time. Underperforming as obviously the US market was either moving in an upwards direction by comparison, or remember that a stock can also underperform by going sideways when the market is going up. And that's basically what was happening here. A lot of sort of sideways moving, certainly downward moving through here. Of late, don't forget what our market's done, or sorry, the US market's done. It's come off a fair way in the last 5 or 6 weeks. Started to move to the downward side, and this one has shown actually counter-directional movement, which is a positive for it. Certainly, last couple of candles, long pin bars, long wicks on the tails of those, which is quite a positive sign as well, and as a result, outperforming. So the structure of this trade for this time is we've just got to break above that most recent medium-term peak, so we're looking at $70.36. with a limit to $71.06 and a protective stop outside of 2 ATRs and 0.5% below our last medium-term trough. Has a protective stop there coming in at $64.33. That's ATR. Next one on the list. Thank you very much, Beyond Charts. This one has a much wider stop. We're getting out to around about 15% on this one. I'm just putting this one in here again because it does meet our price action filter. And again, thinking about this last trough, where is this last trough in respect of the second from last peak? There's the last peak. There's the second from last peak. And it's a major characteristic of a number of the setups recently is that the troughs that are formed are a fair way away from the most recent peak. And that's to be expected because the overall market has certainly had a big move to the downside. So even stocks that are exhibiting good relative strength like this one have been pushed backwards. And as a result, as prices started to turn around, the new trough that's forming is certainly, got a fair bit of work to do because it's, think about what the market's done to a number of stocks just to get back up towards our breakout entry period. So hence, we're getting out to that sort of 15%. It'd be nice to see some of these stocks sort of move up to this level, come back in, put in another higher trough. That's something gives us a little bit better value for our risk that we're going to have. Where are we in terms of history? All-time highs. Again, something about this stock that the market must like. Lots of white candles throughout. A positive sign. We've just got to break through that most recent medium-term peak. So to do that, $154 on the knocker is the on-stop order with a limit to $155.55 with a protective stop at $132.02. That's CHE. Chemed Corp. Next one, Chipotle Mexican Grill. I've never eaten there, but I think it's a fast food outlet. I think, Kim, you're going to the US, so maybe you can come back and report and tell us what it's all about on your return. Last couple of weeks, again, candles looking pretty reasonable. We've got nice wicks on those. It would have been nice to see a little bit more body in those, but at the same time, we've certainly got short-term uptrend confirmed, new medium-term trough in place, medium-term trough well above second from last peak, as you can see. So whereabouts are we? Let's just zoom out. Again, we're at all-time highs. The stock must be doing something favourable. The market's obviously liking it. So as such, all we need to do is structure the trade accordingly. To do that, we need to place an on-stop order at $758.63 with a limit 1% above that to $766.21. Protective stop at $681.57. That's CMG, Chipotle Mexican Grill. Again, relative strength over the last 8 or 9 weeks. Very, very strong. Sideways movement through here, so a bit of sideways movement against a rising index means that we're going to get a little bit of underperformance, but certainly still holding up well when the market's moving down. We're getting outperformance of recent, and certainly a number of white candles. Last few weeks are looking quite good as well against broader market weakness. The next one, FIS, again, a short-term uptrend now being confirmed. Last trough at or above second from last peak. So if we get out the value line, just right-clicking. And the low there. The low there is 65.20. And our high there of 64.93. So our low is higher than our high, which is good in terms of our price action filter. Ticking the box there. Good relative strength. Remember that the scan by default is making sure that our moving averages are all in the right order. So red above blue above green. So ticking the box there. And as such, all we're needing to do is go through and do the price action filter to make sure it ticks the box. We are working at the moment in the background. For those of you who didn't come to the academy, we've been doing some work with Metastock. They have approached us and saying, would your clients like to use Metastock? And we've said, probably not all that much because it's difficult to program. Some might, some mightn't. But one thing they are trying to do for us, and we might be able to get them to come to the party and actually produce a scan that looks at the price action filter, which would be really, really good. So it's something that we're in discussions with them at the moment. It would help the scanning process enormously. So rather than having a scan list that produces in a rising market 250, 300, 500, 600 opportunities that you've got to go through and apply your visual scan of last trough at or above second from last peak. So they're actually providing us with some scans to have a bit of a look at whether they work. And so we're just going through that at the moment. So at this stage, no announcements on that front. We're not going to do anything until we know that something works. But again, we're just trying to make the whole process as easy and as simple as possible. So we'll certainly let you know if we manage to get a scan that works appropriately. FIS, from this point in time, all we need to do is structure our trade on this. A breakout above 72.31, so on stop at 72.31, with a limit to $73.03 and protective stop at $64.87. Whatever we do happen to come up with in terms of scans, etc., you'll still be able to choose whether you want to use Beyond Charts or Metastock, or whether indeed we can get the programmers to program it into Beyond Charts, which would be terrific as well. All right, next one is ICLR. Noticeably, quite a number of white candles through here. Good relative strength. In terms of price action, last trough at or above second from last peak. And again, I've written on here 15%. I haven't got the exact setups here because it's a little bit wide. It won't go on the watch list because of that. But other than that, the price action, it meets the price action filter. We've just got to break through that last medium-term peak there. In terms of where it's positioned, all-time highs, looking really good. Good historic relative strength. Must be doing something right, this particular stock, and moving in the right direction. Just having that larger pullback is meaning that it's going to require a wider stop, so you're not going to quite get as much bang for your buck in terms of where the stop goes, but again, meets the criteria and looks pretty good. Michael said a scan for the best performing sectors would be an advantage. Yes, you can actually do that. We can actually go through and create scans that run based on sectors. We can use exactly the same sorts of scans that we're doing on individual stocks. All you've got to do is create a watch list and put in your particular sectors, and that will actually do that for you. So it'll tell you how that sector is performing against the broader market on a short, medium and long-term basis. So that's something that you can do, and then you can drill down a little bit further as well. So thanks for that, Michael. Kim's just got a comment there. A lot of nice chart setups ruined by technical price action. Yep, that's right. So, and time is required to repair, and that's absolutely right. We've just got to wait for the time being. I'm not in any rush to, be adding lots of trades across the board, and that's up from my own personal point of view. Obviously, market risk at this stage is very high. We need to. There's obviously a lot of news coming out this week that's going to have an impact one way on the markets. Sometimes you just need to be patient with your trade setups, just waiting for the right opportunities. And so rather than, taking the machine gun approach and trying to take every opportunity that comes along, just being a little bit more stealth-like in the way that you're viewing the markets and waiting for the trades to come to you. The market is always going to be there. So certainly good points. Kim says, yep, looking forward to trying out the chipotle and slow-cooked brisket. Okay, you're making me hungry already. All right, let's keep going. On the list there, MD, which was the one we had a look at very much to start with. Short-term uptrend being confirmed. On this particular stock, we've got a much tighter range, if you like, between where our stop is and where our entry level is, and so therefore, in terms of bang for buck, getting a better bang for buck on this one when you're thinking about your position sizing for a fixed risk amount. So this one here, MD, ticking the boxes in terms of price action. There's our trough. There's our last medium-term peak. Or second from last rather, so well above that, so really good price action. Again, thinking about this old point of supply through here, I'll just move that down a little bit. This old point of supply and the old ceiling, we've broken through it, and the market wouldn't allow price to come back down to this old level, so that's a very positive sign. And I just realised I've just deleted the the little stop line that I put in there. Nevertheless, I've still got it written down as part of the annotation. Let's just scroll out and see where we are. All-time highs. And again, think about that all-time highs. This stock has been at all-time highs for a long period of time and continues to go up. So again, how far can it go? That's anyone's guess. Our job is just to manage the risk on the trade. That's all we can do, and the rest of it is in the hands of the market. And that's why it requires a degree of patience. Our on-stop order comes in at 85.59. Put your glasses on, David. With a limit to $86.44. Protective stop coming in at $75.81. That's MD, Mednax Inc. Nice relative strength on that one as well. This one was in from last week as well, I think it was. NVR. If it wasn't, I'll just go over it again. I'm pretty sure it was. It came up, and the analysis from last week seems to be familiar. Also in the watch list. So here, lots of white candles, good relative strength, price action very, very strong. Last trough, well above second from last medium-term peak. We've just got to wait for our breakout, which obviously this week we're getting much closer to. On stop order at 15.84 and 56 cents. We haven't quite got there this week. Highest we've got is 15.83.95. So depending on what happens this week, certainly that one may well trigger. With the limit to $1,600.40, protective stop at $1,422 and 96 cents. That's outside of 2 ATRs and at least 0.5% below that last medium-term trough. That's NVR. NVR Inc. THG, again, I think this was one from last week just to see what's happened this week. It's come up in the scans again, and certainly short-term uptrend continuing on, which is good. Good relative strength, particularly over the last period, so it's increasing in relative strength as well as outperforming the market in all three timeframes. Again, this last area here through, which was an old point of supply, acting as a point of demand. As such, on stop order, let's just make sure we know where we are. All-time highs again. So the on-stop order, pretty clear. 2 pips above the high of our medium-term peak. 83.32 on stop with a limit to 84.15. Protective stop at 75 and 11 cents. TSS, I think may have been in from last week. I think this is one that's also certainly in the watch list as we speak. Setting up again, so another opportunity on this particular stock. I haven't as yet put in the on-stop orders, etc., because I went through and did the calculations, and this one was around about 14-15%, I think, from memory. So just getting out there a little bit on that one. That was TSS. That's all I had in the US at the moment. I can see I've got a couple of questions there. Yeah, Kim's just made a observation on doing sector scans is that what you will find if you're doing sector scans, etc., that's certainly a sector that's outperforming. You will find certainly a number of stocks within that sector if it is outperforming. Excuse me. But what you may also find is that you end up with quite a number of stocks in the one sector, and then from a diversification point of view, you may well find that you're perhaps loading the boat up a little bit too heavily in one particular sector. So that's just something that you do need to be aware of. But certainly, looking for stocks in the relevant sectors makes sense, and certainly thinking about if you've got stocks, if you've got a choice between a stock that's performing well in a sector that's performing well, as opposed to a stock that's performing well in a sector that's probably not performing that well, then I think you need to go where the money flow goes. What I'd like to do now, folks, if it's okay, just to spend a couple of minutes just going through some of the the Australian stocks that are in the portfolio at the moment, and also the US ones as well. So again, I just want to reiterate that your job as an investor, as a trader, with a plan, with a methodology, is to stick to the methodology. to not deviate, to not make up things ad hoc, off the cuff, when market conditions change. You have to stick with your plan. We don't know what the market's going to do, and every now and then they're going to become volatile and they're going to challenge you to stick to your plan. I asked a few weeks ago who was in Capilano Honey, and there were a few people who said I was, and that was back at around about this level here, at around about $17. And I posed the question at the time, well, if you were, why aren't you still? And people get out for various reasons. According to the trading plan, we only need to get out when price closes below our trailing stop. Has price closed below our trailing stop at any point here? The close back at this time was $16.80 and our trailing stop was at $16.74. $16.80 is above $16.74, so no further action required. Yes, it did feel scary. Yes, it did feel as though we were going to give back a significant amount of profit. At the end of that week, we also had a price volume volatility signal. So certainly at around about $16.74, if you wanted to take a little bit off the table from where we got in round at $12, that's fine. You can do that. You've made about $4 on a $12 stock, or about 33, 35% in that period of time. Taking half off the table, that's fine. That's what the signal is intended to do, given that you are up sufficiently in the trade. Making 30, 35% in a matter of a few months is quite a reasonable return. The price has turned around and continued to move up and is at $22. You should still be in this trade if you were in it to begin with. Some of the other ones, Auckland International Airport. Price has not closed below our trailing 3 ATR. Remembering our trailing 3 ATR takes over once it comes up past our initial 2 ATR. Again, ARB, same sort of thing. Just wanted to reiterate, when price closes below our trailing 3 ATR, that's it. We exit. No questions asked. BWP, it's taking a little while for this one to move in the right direction. It is still, at this stage, exhibiting good relative strength. Even though it's starting to weaken a little bit, whilst the rest of our market is going down, it's still holding up. It's still above its trailing 3 ATR. Be patient if you're in it. GHC, this is a stock that has continued to move up over a longer period of time. There's been plenty of opportunities in terms of price action to be able to get into this particular stock, and the 3 ATR line, it does a very good job of keeping us in. We've had a bout of volatility. It's still managed to keep us in. This is how you make money. This is how you grow a portfolio, not by jumping in and jumping out at the first sign of volatility. Yes, it is scary. Yes, it does feel uncomfortable. It is counterintuitive, but it's something that you need to do if you to get any of those longer term trades which are really going to make a difference. GOZ, just hanging in there at the moment against broader market weakness. Again, think about what the broader market has done. IVE, this is an ETF based on Europe and parts of Asia, etc. Yeah, it came back a fair way. It's starting to move back up again. Is it going to continue moving up? Who knows? That's the whole thing. You have to release any sense of attachment you have with your trading. Follow your rules. It's a very simple rule. It couldn't be much simpler. Your job is just to do it. And sometimes the doing part is what people have difficulty with. Horizon Holdings, we got triggered through here. It's just trying to hold up for the time being. As yet, we haven't had the strong price action to drag our trailing stop up. We've got a hard stop in here at the moment, given that our initial 2 ATR stop was breached a few weeks ago. That needs to get a little bit of a wriggle on. That's beyond charts just being a little bit funny. AHD continuing to move up, and again, this is a stock that there's been plenty of opportunity over a number of weeks, particularly earlier in the year, to get into this stock, and you should still be in it if you saw an opportunity then. Of recent times, It's struggled. It's sort of gone sideways a little bit, but in terms of what the rest of the market's done, it's holding up comparatively quite well. APE Eagers, and again, just sort of zooming out, we've had an old point of supply here, which once was broken, took off, came back. Market wouldn't let it come back to this old point of supply before bidding it up. That's where the trade opportunity was, and you should still be in it. So you should, being in at $8, you should still be in at $10. That's 25% up in a very short space of time from about May. You've had a price volume volatility signal go off at around about $10, so if you wanted to take half off the table at that point, you could. Certainly, the candle 3 weeks ago was very, very strong. Given our market weakness, again, this is exhibiting enormous relative strength. Okay, the little green line there, we can't make it much simpler than that. MNF, this was one that triggered, long time ago. It penetrated its initial 2 ATR soft stop, so therefore converted to a hard stop. It's really gone very close to that level. Just to give you an indication, a low of 302. That hard stop is at 301. Just starting to find a little bit of demand there in the market. So hopefully that one can turn around and move up as well. Okay, Blackmores. Just a quick question. Does anybody have Blackmores? Really curious to see whether anybody has it or whether anybody's game enough to say, yes, I had it. Fantastic. Hopefully you've still got it. This is going really, really well. Again, there's a bit of a story behind this. You probably already know the story is that China is very much in search of good quality vitamins, and as a result, obviously buying up big Blackmores products. Fundamentally, certainly the market's onto this story and really just pushing it up higher and higher and higher. 3 weeks ago, at some stage during the week, price would have traded below its trailing 3 ATR. Ken says, yes, I had it, and now I feel sick. Okay, well, hopefully you can see the value in just sticking to your guns and just keeping things simple, because by bailing out here at $80, you've missed out on a move up to another $120. So that's $40 higher than 80. That's another 50%. Another 50% higher. So this thing is just moving along really, really well at this point in time. Don't forget you've got these price volume volatility signals through here. So if you wanted to take half off the table at that point, that's fine. Wait for another opportunity where you can add to the position again. So well done to a number of you that have that. So that's fantastic. As Steve said, hard stop would take you out of the trade several times. That's right. Absolutely. So you have to decide whether you want to use a hard stop or a soft stop. Now, pros and cons to both. Over the longer term, my belief is that you'd be better served with using soft stops. However, when you get bouts of market volatility, that's really going to be challenging along the way. However, thinking about things in a broader, longer-term context, it's these sorts of trades, the trades like Capilano, trades like Ramsay, CSL, MTU, G8 Education, those sorts of stocks that when they occur and you allow them to evolve in your portfolio, it's those big winners that are going to help offset those times when we get those bouts of significant volatility. And again, you've seen in Australia in particular, our market's not nearly as volatile as the US. The US has earnings 4 times a year. So naturally, you're going to have lots of bouts of volatility in that particular market. But certainly the Australian market, certainly it's gone down. It hasn't been without directional movement to the downside, most definitely. But certainly some nice stocks that are holding up there very well. So again, if you only have one of these in your portfolio, it can make the difference between having a profitable year and not, or having a really good year when the market's had quite a reasonable year as well. So it's really all about allowing these sorts of movements to occur. Well, let's just go through and have a bit of a look at the US portfolio. Arch Capital, this is still in the portfolio. It's been in there for a little while, since way back in March. Nearly being stopped out to start with, or at least nearly breaching its initial 2 ATR based stop. Since then, it's moved on really, really strongly from 63 up to about 75. Interesting that we didn't get any price volume volatility signals up at this level. We've had one go off or a couple go off early on. Remembering, there's no point in taking any profits unless you are at minimum of 1-to-1 up. Preferably, if you're 2-to-1 up, then certainly that's an ideal time to take a little bit off the table. But again, understanding that people always feel a little bit better if they can put some capital in the bank. If you're at 1-to-1, you take a little bit off the table. I'm not adverse to that. Just understanding that, when you're taking profit opportunities, think about how quickly you've made the money, what the profit you're taking off the table is in relation to your risk to reward. Because if you take it off at 1-to-1, you're going to need to maintain a very high strike rate to remain profitable. Last week, 3 weeks ago, and the previous week would have been quite scary on this big black candle some stage during the middle of the week. And no doubt it would have been natural for everybody to look at the charts in the middle of the week with all the noise, etc. going on in the markets. Price closed above the little green line. Nothing for us to do. ALR, there's been a number of setups in this over a period of time. Price action for the time being, just really sort of going sideways with the general sort of market weakness at this point in time. We've got our trailing stops in there, nothing else to do. AYI, again, moving quite nicely. Obviously a big black candle a few weeks ago. Price, again, moving down below our trailing 3 ATR. Since that particular point in time. 2 weeks ago, not such a bad candle, but last week wasn't particularly good. Coming back down towards our trailing 3 ATR. Hasn't closed below, so no further action required on that one. BIO, this is one that a few weeks ago triggered its... actually, no, this one's still in the list. I was going to say whether it triggered its initial soft stop on that candle, which it didn't. The low there was 139.98. The initial stop was 139.66. However, the white candle did. And this is something that I'm reviewing as we speak, because I'm not convinced that a breach of a soft stop and then converting it to a hard stop is necessarily the right way to go. Because what it can do is all of a sudden, if we think about it, let's just assume for a moment we've got let's just say a 10% risk on this trade between entry and stop loss. And now that we've breached our initial 2 ATR, if we go and convert this soft stop into a hard stop, and we do that 0.5% below the candle that breached it, then all of a sudden I've got a hard stop in down here, which is almost not 10%, but 20% lower. And that's something that can happen when you get this type of price action. So the jury's out on that for the moment. I'm not going to make any changes just right now. I'm going to review it and review quite a number of trades to look at the impact of using soft stops and how to convert them to hard stops. Because the worst thing that can happen is you're doing the right thing and you're risking your 1% or 0.5% or whatever it is on your trade, and then all of a sudden you're being blown out of the water by a significant move to the downside. At this stage, Kim's just written Aussie futures are up 1.2% before the open. So interesting. Kim's also mentioned curious after the poor data out of China yesterday. Moral of the story, don't listen to the talking heads. There you go. Good advice. So on this one here down here, we've got our hard stop way down here at 130, which is a long, long way away. And all of a sudden, if we do get stopped out there, then all of a sudden that's a big loss. So certainly just to let you know, I'm thinking about making some some slight modifications to the way that we use those soft stops and what happens when price gets down to that level. At this point in time, BMRN turning around, starting to move back up, which is a positive sign after going through its soft stop as well. We've got a hard stop in down the bottom here. But certainly one thing about that, even though it did breach it, where the candle closed was certainly significantly higher. Casey, moving in the right directions, doing all the right things, dragging up that 3 ATR line, just being patient. That's all we've got to do. CHD, again, since being triggered a long period of time ago, way back in January, really just sort of going sideways at this particular point in time. Needs to start turning around and moving up, so hopefully it can do that this week, but no further action required. It's above its trailing 3 ATR. Same with CSL, Carlisle Companies. Last week would have looked a bit scary, looked like it would have been giving all that profit back, turned around, closed up, big white candle. Prices above the 3 ATR, nothing to do. Same with Centus Corporation. CYT, I think that's under takeover. Great big move through there as well. DG, this is one that got stopped out the previous week. Price came down, that big white candle, penetrating the soft stop, converted to hard stop, and then last week taking us out of that particular one. Ken says WTM, which is also on the watch list, and I'll bring that one up. That was one that was triggered last week. White Mountain. So really nice price action on that in terms of pin bar followed by a nice bullish candle. Triggering last week, that's now in the portfolio, going along really, really well. So all we need to do from that is just put on the 3 ATR, that last candle, now drag that trailing 3 ATR up to where our initial stop is. So that's a good sign and going well as well. So let's go back. This was the other one, POST from last week. Just last week during the course, triggering in the 66.95. Just last week, triggering that on that last pin bar type of candle. ULTA, an example here where we have our initial soft stop, which was breached by this particular candle. So if we're converting that soft stop to a hard stop, then all of a sudden I've got to put in a hard stop all the way down here at 120. To me, that just seems ridiculous. It's just way too far away. I'm not happy with the summation that we changed that soft stop into a hard stop down there. Certainly much more interested in the close of the candle, and if it, perhaps if it closes below the initial 2 ATR, then maybe that's the signal to get out. So I'll let you know my thoughts on that over the next few weeks. I'm going to put a bit more thought into that and go back over a lot of the trades over the last about 3.5 years and see if we can come up with a better way to manage those initial stops. WSO at this point in time, price has come back. It's starting to move back up in the right direction. No further action required. This one's been in the portfolio for a while, this WDFC, WD40. It certainly needs to get a little bit of a move on. It's been quite sideways at this particular point in time. Next one on the list, VRX. That's our initial entry point there, the blue line. Price did come down below our trailing 3 ATR, but it's all to do with the close. Close is still above the 3 ATR. No further action required. All right, that's the last one there, VR. This is an example of one that broke its soft stop 3 weeks ago. It's got a hard stop in there now at 42.59, which is below the low of this the white candle, the one that breached it. Starting to move back up in the appropriate direction. VMC moving in the right direction again. A couple of weeks ago, coming down towards that trailing stop. The trailing stop now is at least at break even. Some really nice follow through, strong white candles. Having that wider stop, I know what it's like. In the past, having protective stops that are too close, only being stopped out to see the stock turn around and venture higher. So again, the trailing 3 ATR, what it does do, starting off with the 2 ATR, just to recap, it helps to give you a better bang for your buck, so for your position size, so that should the trade move in the right direction, you're going to profit at a better rate of knots, so to speak. The value in bringing that 3 ATR into play is that once the price action is strong enough to bring that up, then by default what that does is it just gives you that extra buffer, I should say, Warren Buffett coming in there, that extra buffer that allows your trade the sufficient room to move. And I think those of you that persevere with it over a period of time will find that it keeps you in trades and helps you to get some of those really big returns. It's not going to happen to every single trade, absolutely not. But what you are doing when you're doing that is you're creating the environment for those trades to evolve. All right, folks, unless you've got any questions, I might leave it there. I'll get the watch list out as soon as I can. But if there's no questions, then I'll catch up with you for the weekly education session. Apologies for not having an education session last week. I was ill, but I'll do my best to come up with one this Wednesday. I've got some interesting things that I'm reading at the moment, so I think I'll present those as part of general education. Right, folks, good investing this week. Stick to your guns, follow the rules, and we'll catch up with you for the live weekly session next Monday at 9 a.m. Bye for now.